You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Well, hello and welcome, everyone. Welcome to the China Shop. Come on in. We got a special episode for you today. As always, I'm Shopkeeper Dan. With me is Kyle, creator of financialineptitude.com. How are you doing today, Kyle?
I'm doing good. Got football season starting, or in the middle of. Are we week 4 now? So I might have a window up watching my team while we're playing or talking here.
I'm only into football for the gambling aspect. So,
well, that's what this is.
There you go. All right, Kyle, I understand we got a special guest with us in the shop today.
We do. We've got Dr. Gonzalez.
Hello, how are you guys?
Hello. Very well, thank you. How are you doing, Dr. Gonzalez?
Great. Just enjoying this Sunday and talking to you guys.
Awesome.
So I understand that you enjoy putting people through pain for a living?
I wouldn't say I enjoy it, but that's my daily requirement. You know?
Yeah. Oh, all right. Well, you've come to the right place. If you enjoy pain, stock trading will bring you quite a lot if you're trying.
It's a bit of self-flagellation.
Yeah, right.
That's why I'm here. You know?
All right. Well, why don't you start out? Tell us a little bit what your experiences with stock trading has been so far.
Okay. I basically just started in June. My friend just got me into it, and I can't believe this has been going on this whole time. and I'm just, had no idea, completely oblivious. And then, even my uncle called me. He's like, "You know how much money I made in the pandemic?" And I'm like, "I can't believe no one told me this." You know? So, and then it's like I joined the party too late, right?
Well, that's the nice thing about the stock market is over time, it's pretty much going to go up anyway.
Uh-huh.
And if it doesn't, then we got bigger problems.
Yeah, and the more I've learned about it, the more I realize there's no late to the party. Once you actually understand how to read some stock charts, you can using options, you can make a play either way, up or down.
Yeah, I haven't you really gotten into options. I've mostly just done buying and selling and.
Well, it's probably better to start with stocks. Options are just a way of increasing your leverage, if that makes sense. Okay. You can risk a smaller amount of capital to control a larger position. Yeah. But there's also a time component to them. So you have to get the time and the direction right in order to be profitable. And that time component makes it a lot more tricky.
And that's when the charts come in, huh?
Well, somewhat.
I only bring it up because when you expect a stock to drop, shorting the stock is very dangerous and has a greater risk than actually buying naked puts. But that's advanced shit. Let's not get too much into that. So you've been buying some different stocks and then selling them hopefully when they're higher.
Yeah. First I started off, I messed around, of course, dumb, but messed around with some penny stocks and of course, that went nowhere.
Mm-hmm. I know that feeling.
Everybody's done that. Don't feel bad.
I've been training myself by punishing myself. Going, making emotional decisions instead of just looking at comments and then you jump on it and then you knew that it was just not good. So now I'm a lot more got it more in control. But I started off looking at apps, like tip ranks and stuff that would send you signals, and all of it really did nothing. So I've been sticking just to really, Yahoo Finance, Webull, and sticking to stocks that are more very stable, like Apple and Microsoft. And so in case I messed up, I just have to wait a couple of weeks and it'll come back up.
Right.
But I hate missing it.
Well, with those blue chips too, that's actually really good that you started focusing more on those because, like you said, if you do get it in the wrong time, an Apple's not going to go out of business most likely. I mean, they can, but the chances of that versus a random penny stock or some of these short squeezes that everybody's just trying to jump on board. Yeah. You limit your risk a lot more.
Oh yeah.
Yeah.
And definitely. as we've been learning, it's all about managing your risk.
Oh yeah. And strangely enough, a lot of stuff we've come across that'll be pushing like a penny stock. You gotta question who's pushing it, because if I own the stock and I'm telling you want to buy it, I'm telling you ought to buy it because it'll help me. Because I can sell you my shares.
Right.
Yeah, I learned that the hard way, with those Weeble comments sections.
Yeah.
All those fake looking comments.
Here's something too to keep in mind. This is the way George reframed this for us that I actually really like. Whenever you do lose money, because there's not really traditional education for trying to learn the stock market. A lot of it's your own trial and error. Mm-hmm. Just think of it as paying your tuition.
Yeah, exactly. Yeah.
And as long as you take away a lesson and you learn something from it, you got good value for the money that you spent.
No, that's a good point. That's how I thought about it that way too. I'm like, I lost a little here to learn.
Now, do you keep a log of your stock transactions and like why you bought that day or sold that day?
Like keeping like record with notes like that? No.
Yeah. And this is something I still struggle with, but one of the most useful things I've taken away from all of the people we've talked to is writing down why you made your trading decision. Because then however it turns out, you're able to look back and analyze your thought process and method of making that buy or sell decision and refine that to really, really hone in and improve your trading.
Yeah, that sounds good. Yeah.
Well, and the thing is, there's still an element of luck when it comes to picking your stock. It's kind of like there's a lot of similarities between this and being a professional gambler.
Mm-hmm.
You could have all the signals and everything. You can be making the right decisions and still lose money. But over time, if you continue making that same decision when those opportunities present themselves, if you have the statistics on your side, you're going to make money long term. And by keeping that record, the more data that you can compile on your decisions and your transactions, and when you go back and analyze that, if you're making smart decisions, then you should be able to start to see which ones are the right ones and why they're adding up, and how you can continue to make those moves or moves similar to that, as opposed to the ones that end up costing you money.
Mm-hmm.
You should be able to start to see common themes emerge.
Yeah, I'm going to definitely start doing that.
Yeah, it's a big one.
Mm-hmm. It's one that a lot of people don't do too, ourselves included.
Is that you're looking at so much,
Yeah, there's just everyone wants to they think they can just throw some money at it and then walk away with a Ferrari 6 months later.
Yeah. Win Lambo.
Yeah, but it's a ton of work to do it right.
I've noticed that. Yeah. It's a lot of work. It's a second job.
Exactly, it is. It's a full-time job if you want to do it and be really successful at it.
Yeah. Otherwise, just cost average into an index. Just buy the same amount every paycheck on one of the index, and then you can retire off that. If you're looking for a just easy path,
right?
Mm-hmm. Yeah, index is fun. Yeah,
they're not. That's the boring way to do it, though.
Yeah, it's boring and it's slow. But if you want a full-time job,
yeah.
Well, it sounds like
I was going to say, no, yeah, it's a lot of fun.
Yeah, it really is.
I feel more involved with society because of it.
Oh,
I spend time reading about things that I normally would not care about. Like semiconductors and stuff like that I never would have ever looked at.
Sure, that's a good point. I never thought of that aspect of it. Yeah, I'm a much more informed person in world events since Dan and I started doing this show.
Yeah. Same. Yeah, we have a reason to stay in tune.
Right.
I
never cared so much about what happens in China.
No, right.
But it sounds like you've already hit on what I think of as a big basic step of moving from penny stock gambling to I should be trading in stable companies that have existence and growth potential.
Yeah,
right.
Even though it's a lot less, it's consistent. So
yeah. Well, and the thing is, once you can prove that you have good entries, even with these stable companies where the returns don't look that much. Once you can start moving into options and leveraging a smaller amount of capital into bigger returns, you don't need to focus on riskier investments. Yeah, there's plenty of opportunity in the Microsofts and Facebooks, and
in fact, with volume and liquidity, that's where the best opportunities are.
Mm-hmm. Yeah, because it does no good to buy something if you can't sell it.
So, like, normally you'll be looking at the volume, I guess, in the morning and see if you should jump in on something, and
It's definitely a big part of it.
Yeah.
So volume is more of like a confirmation tool.
Okay.
When you see a stock moving in a direction, volume is telling you, volume is what's propelling it. If a stock is moving up with no volume, there's not much supporting that move, and that's not something that you want to try to ride out. But if volume is really above average and propelling that move higher, then you can kind of expect that even if the volume starts to taper off, the price still coast. Right? It's like a car on the freeway. If you slam down the accelerator, it's going to be moving a lot faster. But even if you take your foot off the accelerator, it's still going to have some momentum behind it.
Makes sense.
I like to look at volume pre-market, like before the market opens. And if I'm seeing a ton of volume there, then I can expect the price is going to move a lot that day. In
either direction, right?
Yeah. Okay. Yeah, either direction.
So you normally you would trade like on a daily, day trading?
Yeah, I this is what I've found myself gravitating towards. I like being out of a position at night because I don't know what's going to happen. I prefer it. Swing trading is a little bit longer, but it's easier. In the courses that we took, they teach the breakout trade, and it's a lot easier to anticipate a breakout than anything else, in my opinion. A breakout for the day. So you can ride the options for 10 minutes to 30 minutes and make your money and then move out and be done and then not worry what happens to the stock price after that.
Yeah, I kind of like that.
It's interesting that you mentioned the time frames too. But one thing that we've learned too is that markets are fractal, and took me a little while to understand what that actually meant. But what that really means is that if you just continue zooming in, you're going to see the same patterns emerging. So when you learn how to trade a breakout, you can use that on a weekly or monthly chart. You can use that on a daily chart. You can use that on a 1 minute chart. Like the patterns hold over multiple different time frames, and they'll emerge in different time frames.
Yeah, okay. So the amount of time is really up to your personal preference.
Okay. That makes sense. Yeah. Just zoom in.
Well, and believe it or not, it's zoom out first. You want the longest time frame to get the overall pattern, and then work your way in.
Yeah, and that's kind of what we were looking at before we hit the record button. Start from way out. Start with the weekly. Draw your support levels, which you want to look for, the peaks and troughs, and you want to look for 3 points of contact for each of those levels that you draw out. And then you're just going to continue moving in on your time frame, go from a weekly to a daily to an hourly, and then just keep on platting those levels, and then you'll get a bunch of areas where supports and resistances should be formed, and then you can use those to kind of pick your entries and set your stop losses.
Yeah, that was pretty quick, but that was pretty concise and great. I was telling you, you should make a video on that. I wrote it all down. I was like, damn, in a couple of minutes, you broke it all down. It was really nice.
Oh, thank you. Glad I learned something from all those courses.
Did you tell them about volume by price?
We looked at it a little bit. I set them up with a link to TradingView. Unfortunately, the only way to get that with TradingView is to pay the extra little bit. It's well worth it in my mind.
Yeah.
But we looked a little bit at that.
Volume by price is the number one thing to help you draw your levels to be able to pick a target. And by that, I mean, like if I see the trend is bullish and it's going up, I want to know, where is it going to find resistance? Where is it most likely going to have trouble to keep going up? And that's going to be my sell target. And you can find that with volume by price. The two areas you look for is when it gets really fucking loud and when it gets really quiet. Like those are key points in the volume by price.
When it's really quiet, you're more than likely going to blow through those levels. It's not going to spend a whole lot of time trading there.
I think that's the big chart that the first chart that blew my mind was the volume by price. It was like, how have I been doing anything stock related without knowing about this and using it on every chart I look at?
Wow. Definitely gonna look into that now.
Yeah.
We kind of just jumped right into trading and picking levels and entries, but I feel like we might have skipped over another really important part, and that's talking about the risk management side of it, because that's really like the number one thing that you should be focused on, especially as a new investor.
Yes.
George often shares a chart where he looks at, if you experience a 50% loss in a position, if you blow out 50% of your account, what kind of gain do you think you need to see in order to get back to break even? And the answer to that is actually 100%. So you have to you have to look for 100% gain to make up for a 50% loss.
Yeah.
And so, yeah, the math can really add up to really stack up against you if you're not careful at managing that risk. A 90% loss requires a 900% gain to break even.
That sounds horrible. Yeah.
Right.
So stop losses are huge. When you're looking at entering into a stock, you need to have a plan as far as how much you're willing to risk, how much capital you're willing to risk on this trade.
Yeah. Do you ever ask yourself that? Do you ever, when you're buying a stock, say, okay, how much money do I lose before I get out of this trade?
Yeah, that's funny because I started doing that recently, where I would look like if I have profit, I would just basically put a stop loss right there. So if it goes down just a little, I'll just get out.
Smart.
But I want to be more accurate. Obviously, I may just do that on a daily. If it goes up, just stick with it, and then if it's going to drop back down, the next morning, just get out.
Well, start with putting a plan together with how much is acceptable to lose, what percentage, and you should only really be risking about 1%, 1 to 2% of your total account balance per trade. And that sounds like not a lot, but you can actually leverage that into quite a bit of stock of actual shares. Because if you're looking at let's take something that's around $100 right now. What's a good stock, Dan?
I think Peloton's around $100.
All right, let's look at Peloton.
It might be about 90.
It's also quite a downtrend right now, so I wouldn't recommend buying this one at any stretch of the imagination. But just for the sake of looking at it, say you picked it out, you think, okay, I want to risk $300, and I want to get in at about $85 a share. So what you do is you figure out where your stop loss needs to be set. If you're setting your stop loss at 80, then that means you can risk $5 a share. So 200 divided by 5 means you can actually buy 40 shares. You can purchase times 85, $3,400 worth of stock.
To risk 200.
To risk 200.
Yeah, big difference.
Right?
Does that make sense on how to kind of go back and reverse calculate like how much you want to buy?
I guess I'll have to look at that more. Probably visually it'll be a little easier. But I know there's a lot of YouTube videos on that.
We should put together something for the website. Maybe I'll do that over the next week or so.
I know when I started trading, how much of a position I was moving into was literally, how much cash do I have right now in my account?
Oh, right.
That's how many shares I want. Not the best way to do it, I assure you.
No, when you get into a position, the first thing that you should do is figure out when you're getting out. Yeah. And then that's on the upside and on the downside. So how much are you willing to risk? How much are you looking to gain? And then you need to have a plan to execute. So that way, when it actually hits one of those targets, you're ready to act. You're not trying to figure out what to do. Because that's where a lot of retail or new traders get stuck. They don't know, like, oh shit, it just dropped, $5 overnight. What do I do? Well, if you have that plan already put together, then you're getting out and you're not questioning it.
Yeah. Now that I've been using stop losses, it's a lot more ease of mind. I'd rather get a message that tells me, oh, it's sold, than to look at it and it's like horrible.
Right. So now what you need to do is learn where to put those stop losses, right?
Yeah. To actually know where to put it. Mm-hmm. That's my next homework.
That's what Dan was saying with the volume profile, and then being able to map out the support and resistance levels. Using those two tools, you should be able to come up with exit levels and for take profit and for protecting capital.
I think I'm going to be sitting down a lot today on the computer.
Did you already talk to him about the different chart styles?
No, we just. Oh yeah, actually, I didn't even think that we should be looking at telling him about candlestick charts.
I'm actually in the process of. I haven't set it up yet, but I think for options, even I'm switching just to all range charts.
I would stick with candlestick charts for now because there's also patterns that he can learn.
I'm not saying I'm not saying teach him range charts. I'm just saying for myself and for listeners who listen to us over and over again. By the way, candlesticks are great, but what about candlesticks with range, huh? So, Dr. Gonzalez, are you looking at just the regular line charts that like the different apps pop up?
I did before. Now I actually look at candlesticks.
Do you understand how a candlestick, what it actually represents?
I have a good idea, but it's not fine tuned.
Okay, for anybody else who may not know, we'll just go ahead and walk through that real quick. So the body of the candle tells you the price open and the price close for the time range you have selected. Okay. And then the wicks, the little tails that go above and below, show you how high or how low the price got during that time frame. Mm-hmm. So if it's a green candle, then the bottom of the body is going to be the open price for that time. And then the top of it's going to be the close, and then vice versa for a red one.
Okay, yeah, makes sense.
And then those candles, they actually tell you a lot of information about the price that you don't really see if you're looking at a line chart. Like if you see a really long tail and then a very small body, what does that tell you? Well, it tells you that somebody, let's see, tails usually the bottom. So it tells you that sellers really tried to push and sell this stock down, but then buyers stepped up and they forced it right back up, and not a whole lot of price move, or not a whole lot of ground was gained by either the sellers or the buyers. There's a moment of indecision there. There's a lot of shares trading hands, but the battleground has been defended well by both sides.
Yeah, I love thinking of it in terms of the battle.
It really is. And then, it makes it really exciting when you're watching them take place in real time.
Right.
Oh, shit. Sellers are really pushing the advantage now.
The only thing that messes me up with that is I always forget that, okay, oh, wow, sellers are winning. Okay, yeah, everybody who just sold, they're now a buyer. Buyers are winning. Everybody who just bought, they're now a seller. I always forget, like, it's a constant, like the people who are on either side keep rotating back and forth.
Mm-hmm. You should expound on that a little bit more, Dan, because that was a big aha moment the first time we ever talked to George for us.
Yeah. So, like when you're trading with your account and you have cash, you're a buyer, right? You're looking to buy let's use Apple stock. You're looking to buy Apple. Okay. Well, it's in the morning. You like the volume, you like the levels, you like where it's at. You buy your shares. You got 100 shares. Great. Now you are a seller. This is what I was alluding to back when we were talking about like comments on Webull, and it's like, yeah, of course I'm going to tell you should buy the stock if I already have it, because I'm a seller, and as a seller, I actually want the price to go up. If the price goes up, I make more money because I'm a seller. So it actually, in terms of the battle, I've been trying to shift my head where the buyers are winning when the price is going down, because as a buyer, before you bought that Apple stock, oh, it's at $150. Well, wouldn't it be better to buy it at $140? You want to buy it as cheap as you can get. But once you've bought it at $140, now that you own Apple, you want it to get up to $150 so you can sell it, because you're a seller and you want to sell it for more than you bought it for. But once you sell it, then you have your cash. Then you're back to being, well, you can buy it if you want it. You can't sell it again because you don't have it. So now you're a buyer. It just keeps going back and forth.
But where that becomes important, when you see a stock like shoot up, like because they have good news or they're expecting, earnings to come out, that's going to be great. The problem is if everyone's already bought it, who's left to buy it?
Yeah, you run out of buyers.
If everybody's already bought, then it's not going up anymore because there's no buyers. Everybody's a seller now. So when you see those stocks that really take off, that's why I start to stay away from those now, because I can't tell. I see a shitload of buyers already. I'm not looking to be one of the last buyers trying to jump on board.
Yeah, that's the worst.
Yeah, buying at the top is not the fun place to buy.
Yeah, so keep that in mind when you see a huge volume spike and price just shooting up. If basically everybody who's going to want to buy the stock for the next 3 months has bought it all within the last hour, there's not going to be very many buyers left at that point.
That's a good way to put it, yeah. One of the worst things I think is, even if, you're looking at the chart and, you're doing everything correctly, at least you think you are. And then next morning, something happened in China and everything's tanking.
Right.
I hate not knowing. I don't know if there's any source that you should be looking at in the morning that will just let you know right away that this is going to be a really red day.
Once the pre-market starts, you're already going to know that because it's already happening.
You just see it all look horrible and I guess get out.
Yeah. I mean, that's kind of that's one of the downsides of trying to swing trade, which is, considered more longer term. Anytime you're holding overnight, you have that risk of overnight gaps. The only thing you really try to do to mitigate that is to just make sure that your entry points are at places where there's great support and your stops are just below that. So that way you're protecting yourself. As long as you're picking better entries, that should be less of a concern.
Yeah.
And then also making sure that you're always trying to trade on the trend direction. we talked about shifting out to the 1 week chart first and looking at the trend. If that trend is bearish, you zoom into the 1 day, it's bearish. You zoom in on the 1 hour and it's bullish. You're not trying to go long on that stock, because over the longer term, it's not a good long-term investment. It's got too many factors telling you that this thing is going down.
Yeah, if anything, if it's going up, then the smart trade is to try and find where it's going to hit resistance, turn around, and to go back to dropping, because the trading with the trend is always going to get you the bigger moves.
It's the bigger moves and it's the bigger probability. Mm-hmm. You want to trade with the higher probability at this point.
Oh, yeah.
Yeah.
So we talked a little bit off the air about what constitutes an uptrend or a downtrend. I'll just reiterate that since now we're actually recording. You're just looking for higher lows and higher highs on the peaks and troughs for an uptrend, and then vice versa, lower lows, lower highs for downtrends. And then you're watching that. If you are seeing higher highs and higher lows, but then you see a low that drops down and takes out one of the previous lower lows, now your trend is invalidated. Okay. The trend is broken. If you're looking for something to tell you to get out of a stock, that's always a good one to start with. If you fail to make a higher high, that's also another red flag. Move your stops up if you want to stay in a little bit longer to see if it'll continue on or not. But that'd be a point where you want to try to, take some profit, get out of here.
Yep. And sideways movement, it definitely happens. Like you'll see it going in a range, like it's failing to make higher highs and it's failing to make lower lows. That is a specific part of market structure that they call consolidation. Usually that's happening before a bigger move up or down. It's my rule of thumb that no matter what you're watching for either way. You're watching for the breakout down or the breakout up on big consolidation moves.
So you kind of just leave it alone and get ready for something to happen?
What Dan is basically saying is he's trying to trade without bias. He's going to trade whatever the trend gives him. Let the price tell you what move to make. If the price is going up and breaking out on the upside, then you want to look for riding that move. If it's dropping, but you thought it was going to go up, don't let that bias trick you into trying to say, it's cheaper now, I can buy it now.
Yeah.
Because no, the trend just showed you which way it wants to go.
Right. If you can identify those levels.
Let the market tell you what it's doing. Don't try to outthink it or guess.
Some of my biggest mistakes, Kyle's heard me say this so many times, I was right and the market was wrong. Well, guess what? No, that's never true.
Right.
Never been true once.
Okay, so we've just been kind of just blabbering on and on here. You have any other specific areas that you want us to try to cover, Dr. G?
I think we've tackled it pretty straight on. So, yeah, I had a whole list here and we kind of went over it all.
Did we really?
Yeah.
All right.
Hopefully not too fast. Is there anything you want us to clarify or spend a little more time on?
Really, I wrote down everything you told me. So I want to be actually looking this up, researching, some volume by price and all those specific stuff. So yeah, I got homework here.
I would check out Trade Pro Academy's YouTube channel too. They have a lot of shorter lessons that they offer for free on there that kind of talk to you about market structure, consolidations, and other trading strategies and things that you can use. Those things they have a lot of really good information out there that's real eye opening. Especially if you're not looking to, commit, a couple $1,000s to take their courses. It's a good way to get your kind of feet wet and see what actual information is out there, like the good information.
All right.
We've also added you to our Discord too. So if you have any other questions that pop up, if you want some help looking at charts, feel free to post them because we love analyzing charts. And as you see, it doesn't take that long.
No, you do it pretty quick.
Did you go over some of the stocks that he's already invested in?
We looked at Microsoft. I mapped out some levels for him, showed him how to identify the trend. Showed him how trend lines work. I showed him volume by price so you can kind of see what it looks like. And then we talked a little bit too about volume, just looking for volume to confirm your moves. Biggest thing I'd say to take away is that what George told us in the first lessons that we listened to, there's two ways to become profitable or more profitable, right? One is obviously picking better stocks and getting more return. But The number 2 one, and this is the one that nobody really pays that much attention to, is actually losing less.
Yeah.
If you can limit your risk, if you can manage your risk professionally and do it like the professionals do, you stand a much better chance of at least being able to continue and protecting your capital.
Yeah.
Your number 1 rule as a trader should be to manage your risk.
Mm-hmm.
Yeah, that's learned that the hard way.
And most people do. Most people blow out their accounts 1 or 2 times before they finally figure out that, hey, I don't want to have to go back to work for another year to try to build another account to try this again.
Kyle, get out of my head. Yeah. But it is doable. You can learn these skills and apply them and find success. It's just there's no get rich overnight aspect to it.
Nope. Screen time.
Yeah.
Screen time is the key.
Right.
I like where you started when you said you're looking at the bigger cap funds. Put together a watch list of like 10 or 15 stocks that you're going to watch. Map out all your levels on those stocks, and then just follow those stocks for a couple weeks and kind of get a feel for how they move. And by focusing on those, you should start to get a better idea of where maybe your entries and exits should start to be. Try just watching it for a couple weeks and not actually trading it. Just watch it and observe it. Map out your levels, watch what happens when the stock gets to those levels, and then journal your findings.
Yeah, that's one thing I kind of skipped is paper trading. I just, the excitement of it, I just want to get right in there,
Well, this is not even paper trading. Don't even paper trade it. This is just observe. Tell yourself this is your orientation period. I want to spend some time learning how the markets move, how these levels hold when they fail, what it looks like when it fails, what volume does. Just observe. Just tell yourself you're going to observe and try to write down as much as you can. Try to find common themes, and then I guarantee you that'll make you a much better trader by the end of that 2-week period.
Oh yeah, yeah.
In fact, you can even do it for 3. That's what we did.
Still have a week left when it comes to futures.
I know.
Even I'm sitting and watching a screen all day to try and learn more. Really, what it comes down to is once you really, it starts to click and you learn the market structure of it, you start to learn what you're watching for, and then it becomes more like practicing a skill because you're actively applying this knowledge to an ever growing chart. Nothing can replace that screen time, that practice, really.
And it'll also teach you patience.
Yeah.
If you spend a couple weeks just watching the markets move, you'll see that there's opportunities every day.
Mm-hmm. Yeah, you don't have to rush in.
You're not going to worry about missing one.
Oh, God.
Like, I missed this one. Okay, I'll get the next. Once you get that attitude, too, that really helps you go a long ways.
Yeah, this is exciting.
Glad to hear it.
It is. Yeah.
Right? Hopefully you had some aha moments.
Oh, yes. And then, with how bad it's been in the last 2 weeks and the general, trend, it's kind of makes you feel like discouraged, but no.
Well, I mean, eventually you stick with this, you're going to learn how to take advantage of those down moves, and you're not going to care which way the market moves. All you care about is it moves.
Yep.
I want to use those red days to my advantage.
Exactly.
Well,
so Dr. G is a dentist, Dan. Should we use this chance to ask him some dental questions?
Yeah, I'm gonna turn on my camera here. I want you to look at my front left incisor.
No, I have a couple questions that I wanted to ask. All right, so every time I go to the dentist, they stab my gums with the large metal pointy spike, and then they're shocked that they bleed. What is the purpose of that test? Like, are you just torturing me, or is there really something to that?
The one that they go all around, stabbing you everywhere?
Yes. So, your gums are in terrible shape. Yeah, well, normally I don't stab them with a large metal spike.
Yeah, they go there, to measure it. The gums, obviously, from the tooth there, but that could hurt.
So what is the purpose of that test? What's the reasoning?
Oh, if they put that in there and it really sinks down in there, then the tooth is, being detached from your... So it's kind of to see, how well is the health of your perio health, the bone in your jaw.
Mm-hmm.
Oh, that might be important.
Yeah. And if it hurts a lot, it's probably because it's sinking too low.
All right. Is there a reason why the drill makes that terrifying whirring noise that gives everyone nightmares?
Is it safe?
Like, have they not figured out how to put a muffler on that, or do you guys like it to make that noise?
No, I I hate the sounds. There's too much noise. And like the crunching noises when you're taking out a tooth. The patients love it. Yeah.
Oh. When I was in the Navy, they took out 2 of my wisdom teeth, and the Navy doesn't like to put you under for some reason. I'm sure it's just cheaper to just numb you out and yank the thing out. But yeah, they had to cut mine in half. Not enough Novocaine. They're real stingy on that. So yep, my dental experiences have not been as much fun. But I think we'll probably have to schedule a chance to give you an opportunity to redeem the profession.
I'll be nice.
All right, Dan, do you got anything else, or should we wrap this up?
If we've answered all his questions, then yeah, I think we're doing all right. If he doesn't have any more follow-ups, I don't have anything.
I mean, we got you added to our Discord, so if you got any questions, like I said, post them on there, and then we can maybe do a follow-up on this.
Oh, I definitely will. Thank you so much. Like, you just gave me a lot of information and a lot of resources.
I did think of one thing I want to circle back to real quick before we end. Without the volume profile, I mean, obviously you should go out and get it. Like, it's fucking worth it. Looking at range charts and understanding range charts can give you those key levels. They definitely clue you in. And what a range chart is, like we explained the candle. It tells you, red or green, tells you where the top and the bottom was, tells you where as high as it got, where it opened and closed. A range chart just tells you, hey, I want this chart to show me the bars. You can set them up to be candles on some platforms, but show me just like when it traded between $10 and $11. That's a $1 range. Show me the $1 range. So it shows you not where the price was by time, but just the range that it got to until it gets out of that range and moves on to make another bar. And when you switch to that range chart, like I may have explained that really fast and not as clearly as possible, but it will show you those key tops and bottom levels to look for moving in or out of a position.
The range chart will basically take away all the noise of a chart.
Yeah.
Okay.
Because it won't create a new bar. It won't move on. Instead of like creating a bar every 5 minutes, every hour, every day, it won't create it unless it moves outside of the range that you tell it. So if you have it on a 50-cent range until the price moves above or below that range, it won't create a new bar.
Oh, okay.
So because of that, it takes a lot of the consolidation periods out, and then just kind of it makes it so you can look at a much larger chart and see those levels a lot clearer.
Oh, that's very cool. Probably great for stocks that are pretty volatile.
Or even less volatile. It's better because it just eliminates a lot of noise. But the consolidations are kind of important to see too. You want to see how long it spends time in there, how much volume is traded in those ranges, because the ranges are basically like the coiling of the spring, right? The longer time it spends in a tight range, the more stops are accumulating above and below. Because anybody who's shorting, it's going to put a stop above to buy back their stock. Anybody who's buying it's going to put a stock below that range. When you finally do break out, all those stops are going to get hit, and everybody who's on the wrong side is going to be closing out their positions, and that's just going to propel it higher. So the longer a stock spends consolidating, the bigger the move you should expect to see.
Anyway, I just wanted to give range charts a shout out because I've been watching a lot of them lately, and I'm loving them. And, I felt if there's one last cherry on top that I could put on his notebook for him to walk away and give him even more stuff, it would be range charts.
I would say put that at the bottom of your list, though, for now. Learn the other stuff first.
Yeah.
Okay.
Yeah. Anyway. All right. Thank you so much for coming by, Dr. Gonzalez. This has been really fun.
No. Yeah, thank you guys. Thank you guys. This is awesome. Yeah.
Yeah, hopefully a lot of people get some value out of this. I think they will.
Yeah.
I'll definitely push it towards my friends. Yeah.
There you go.
There you go.
All right. And they're probably going to be getting into it too. Yeah.
Well, you represented the dental field very well.
Yeah.
I'll say.
Yeah. All right. Well, I don't have anything else. Kyle, you don't have anything else?
No, I'm good.
Folks, we're so glad you joined us for this beginning trading episode. We got through a lot of technical analysis today. We really hope that it inspires you to learn more and do better. Got to give another shout out to Trade Pro Academy. They are the best place to learn technical analysis that I've ever come across in my life. And I believe that's about it. Kyle, any last goodbyes?
Nope.
All right. Happy trades, everybody.
Bye.
All right, thank you. Bye.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.